Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Tuesday, April 1st, 2014. Markets are up today. I did call for this yesterday to our members, saying that the first day of the new quarter might see some money inflows, and that's exactly what we're seeing. We're not seeing a lot of volume by any stretch, but we are seeing the markets trailing to the upside. Basically, 64 million traded today at around 3:15 p.m. Eastern Time when I'm doing this video, so that is very, very light volume. But nonetheless, the markets are higher. We are seeing the leader today being the NASDAQ, which was and has been the laggard lately. The reason for that is very simple. This is the third day up in a row since Friday, since yesterday, which was Monday, today being Tuesday. Therefore, you're seeing investors start to take risk back on. And obviously, the NASDAQ, the Russell are leading the charge. If I bring up the QQQ here, you can see really percentage-wise up 1.5%, while the S&P 500, for instance, is only up 0.5%. The Dow is only up 0.3%. So just a monster move on the NASDAQ. This is being driven by stocks that were recently hammered to the downside, like Priceline. Take a look at that, up $45 on the day. Netflix, take a look at that, up $7.77 or 2.2%. Other stocks out there that have been hammered lately, Tesla, look at that, up $6.35, 3% on the day. So all of these stocks that have been hammered recently are seeing massive inflows, which is why the NASDAQ is leading. It's almost a reverse of the capital restructuring or the capital flows we've seen of late. Now, the big news on the day, I don't know who caught CNBC today about midday, but there were some great fights on there about this high-frequency trading and whether or not the markets were rigged. And it was just fun to watch. You know, ultimately, I've been saying the markets have been rigged for ages. Since the beginning when I started my radio show not long ago in January. I was talking about it live on air on 8:20 a.m. News Talk Radio on Sundays, my show. But the key is I'm a little differing here in the opinion. The markets aren't technically rigged per se where the average investor can't make money. What happens is the institutions will drive the market in certain directions to get a emotional response from the average investor, which would be, for instance, to buy at all-time highs when the markets are topping out, or to sell at all-time lows when the markets are bottoming out, like in 2009 and so forth. So what they're doing is they're not technically rigging it so you can't make money. They're initiating a response where your gut, your emotion is telling you to do the wrong thing at the wrong time. And that, to me, is what the rigging is. And listen, I mean, that's a big deal, too. Now, they're talking more about high-frequency trading and how it front runs. And yes, I mean, there's no doubt about it. These programs get the news a quarter of a millisecond before you and I will get it. But in all fairness, by the time I click my mouse button, I'm not fast enough to get that anyway, so I don't really care about that. And if you're a long-term investor, as long as you're buying at lows, you know, what do you care if you got a penny different in print on Microsoft, right? I mean, it's not that big a deal. But I think the bigger deal, which isn't getting discussed here, is the emotional reaction that's being generated. And these institutions do that on purpose. They drive the markets to extremes. And in fact, the Fed feeds into that by helping create these bubbles. And what ultimately happens, again, is the market drives up. Then you get analyst upgrades like on Apple at $700, Twitter on $75. Look at where Twitter's trading and where Apple's trading now. But the analysts were upgrading there because that was the hot area. That's what the institutions told them to do. The media takes those upgrades and pumps them, which gets the emotional response from the average investor to buy at those highs, exactly when they should be shorting or selling. And then that's how the distribution, that's a transfer of capital, essentially, where these, the small investors essentially buy at the highs and then lose all their money and then cover at the lows or sell at the lows, and the institution, and just back and forth, transferring of capital across the board. All right, in any case, bottom line is volume's light today. Markets are setting up for some key news. We got some Chinese news last night, which wasn't great, but it was better than the Wall Street had expected. That helped get the markets up a little bit today. The dollar yen has been trailing up for most of the day as well, which has helped the markets. Also, you have a jobs report tomorrow. That's not the final jobs report from Friday, which is the non-farm payrolls, but tomorrow we get ADP private sector. All right, and that's going to be a number that the market's going to watch very closely. So these are the keys here. It's interesting that there's been a lot of price warnings, earnings earnings warnings lately that really hasn't been discussed by the media, the financial media, but I do think it warrants us paying attention as a lot of these companies are ratcheting down their expectations coming into earnings season. Remember, probably within 2 weeks we'll start to get some big name earnings out there. JPM and some of these other plays by mid-April will be reporting earnings, so that should be fun as it gets very, very wild. And by the way, that volatility from earnings is great for day traders. If you're a day trader, you love that. Even for swing traders, just getting the swings in the market that we're so used to in 2014 has just been great. We did enter a new position today. There was a new alert given in the research center, and sure enough, right now, that actually is performing very well so far. Beautiful fall on it. We shorted a stock here. Obviously, I can't talk about what it is, but it's already dumping out very nicely today. So good to see that as well. All right, guys. On that note, I'm going to step aside. Come join us here at InTheMoneyStocks.com. Profit with the pros. The research center is where you want to go. Take the 7-day free trial. Take care.